All right, so let's discuss mortgage types. You kind of mentioned conventional, FHA, VA, USDA. What's the difference?
So what I always tell people is there's generally 5 types of mortgages in the United States. And people watching at home, you can even write these down. They're pretty easy. Number 1 is a VA loan. So a VA loan is a mortgage which is guaranteed or backed by the Department of Veterans Affairs. Of course, the downside to a VA loan is that you had to have been in the military and served and have eligibility. So that's a VA loan. So that's one type of loan. A second loan is a USDA loan, the U.S. Department of Agriculture. Now, every time I say that to people, Sophie, the first thing they think is, hush, I'm not buying a farm. That's good because I can't do a USDA residential mortgage loan on a farm. But that loan is guaranteed and insured by the U.S. Department of Agriculture. USDA loans, they took the USDA, and in rural areas, you have to be in a rural area to get the USDA loan. The U.S. Department of Agriculture already has a footprint in those areas. So they carved out a little part of the USDA and allowed them to insure or guarantee residential loans. So there's a lot of lenders out there that do loans in rural areas. USDA serves those. That's a USDA loan. Those are no money down, by the way. VA is 0 down. USDA is 0 down. Pretty impressive. Pretty good.
Yes.
Then you go to FHA. That's the third type of loan. FHA is a mortgage loan insured by the Federal Housing Administration. So it's a government agency that insures mortgages. Conventional, the truth about conventional is a conventional loan is any mortgage not insured or guaranteed by the United States government. That's all it is. So, VA is the VA, USDA is the USDA, FHA is the FHA. Conventional is just not one of those. So conventional loan is not insured or guaranteed by the government. And that's a conventional loan. Now, people have heard the names Fannie Mae, Freddie Mac, and I use them all the time. Fannie Mae, Freddie Mac are investors for conventional loans. Well, that's 4 types of loans. The 5th loan I tell people is a portfolio loan. A portfolio loan is a loan in which the lenders, such as ourselves, we don't sell it to anybody. We just give the loan and we hold it ourselves. Now, mortgage bankers or brokers such as myself really don't have portfolio loans. Banks do. A lot of times your local community bank will have products that to someone like me sounds like crazy or off the wall. Well, the truth is that's their portfolio product. So the 5 types of loans are VA, USDA, FHA, conventional, and portfolio. Portfolio is where the bank holds it. They're not selling it off, and they give those loans. Those are typically very high standards, though, for them to give those types of loans.